This is a video on the corrections of Hebe PLC. I'm going to correct part B, and I'm also going to talk through part C, because there's a good bit of marks going for here, and it's now time that we start kind of finishing off everything there is to do question 5. Okay, so this is debenture holder viewpoint, performance, state of affairs, prospects. Performance here we have at the top. Return on capital employed, it's gone down, disimproved, it's an unhealthy trend, they're not going to be happy too much. The profitable position of 11.8 is still better than the risk-free investment. I just took this again from the marketing scheme and changed up a few things. It's 1 to 2% now. You can see how different that was back in 2010. 5%, less than 5%. Please don't treat marketing schemes from anything over. To be honest, even the last couple of years, some of them would have to change. Now these change quite a bit. Anything this old, 10 years old, is now more or less outdated. So the profitable 11.8% is a good bit better than 1 to 2% for risk-free investments, and they have a debenture rate of 8% on debentures, which you can see down here. So it's positive at least that it's above that. But again, it's a downward trend, so they're making less efficient use of their resources. They won't be happy with the different performance. I've added in the EPS has fallen from 21 cents last year to 15 cents this year. Also cause for concern, a drop. The dividend cover was 1.3 or is 1.33 times. It was 1.4 last year. So it's worsened again. They're more or less paying close to all of their profits are going to dividends, which is an excessive amount, almost a third, or almost 3/4. Sorry. This is a worsening trend and will not please debenture holders, as large amount of profits are being reinvested in the company. Again, this is a debenture holder. They do not care for the shareholders as much as they care for themselves. They would prefer the money to be invested into the company and the money to be used, the profits to be used to pay back interest. They don't want to see this. They don't want to see that a lot of the profits are going to dividends. So based on this year's profit of 65,000, which we can see here is our net profit, based on the profits, 50,000 went to retained, or 50,000 went to dividends, and we only retained 15,000. That's a disaster. They'd like to see the dividends rate drop significantly. I'm up here. The more the profit should be retained for the repayment of debentures. The percent of profits given out, which is our dividend payout rate, which is the last one we can see here. It is our DPS divided by EPS, dividends per share divided by earnings per share. So if we divide the dividends per share of 15 by 21, we get 71% last year, and this year our DPS divided by EPS is 75%, which means that's our dividend payout rate. It means that we're paying out 75% of our profits as dividends. Ergo it's closely, obviously, it's like an inverse correlation to the dividend cover. They're quite similar. The state of affairs after performance, we got the state of affairs for debentures and for the bank. There's 3 things here for state of affairs. Security has gone in instead of the market share. Debentures are secured on fixed assets. The debenture holders would be interested in the size of the assets to make sure there's enough security for the loan. Okay, this is a general intro. There are fixed assets of 820,000, as we can see in our balance sheet, 820,000, of which we have 520,000 tangible, and we have investments of 120. So that's 640,000 excluding the intangible. Debenture holders would be happy to know that this, they would like to know whether this reflects the true value and has depreciation been accounted for. This is just a line you throw in here all the time when you're talking about security. You just want to know, basically, is depreciation accounted for and is this a fair value for the assets. However, the debenture holders would feel secure because of the excess in value of fixed assets over the loan. Fixed assets and investments amount to 640, the loan is 300, therefore we have a lot of excess cover on security. Their investments are 95,000, but the venture holders will be disappointed at the fact the investments have dropped from 120,000. So we see here, we see investments that the market value is actually 95. So even though they're in the books at 120, if we were to sell them, we'd actually lose 25,000 from them. Liquidity last year was 1.1. This year it has significantly dropped to 0.36, which is an absolute disaster. They're completely incapable of paying off their short-term debt, and they're going to be in trouble. The worsening of the ratio indicates a difficulty in paying debt, including future interest. They would come under pressure and funds would not be available to invest for the purpose of repaying the loan. This is a really bad sign, because if you think about it, cash is included here in current assets. So if this here, excluding closing stock, is significantly lower than here, it's basically telling you that you don't have much cash, you don't have much money coming into you in the short term, and you've got loads of money that you need to pay out of 48 grand overdraft, and this amount of creditors that are looking for money. This is where people get into trouble. So that's quite frankly terrible. They're going to be very disappointed. Straight away, once you see that, you're going to know that debenture holders are not going to be satisfied. The company is lowly geared. The gearing is 43.48%. However, it was 37. Remember, we do not want this to get higher, because it means they move closer to being highly geared. So they have gone up from 37 to 43, which is bad. They're becoming more highly geared, even though they're still below the 50%. They're now more dependent on outside borrowing than they were last year. If this was to continue, they'd be concerned as they become, I suppose, highly geared. Interest cover was 4.7 times, last year, but is now down to 3.2 times. Obviously, it's a worsening of the trend. It's a little bit concerning. Prospects is the last one. I've changed this around a little bit. Dairy industry has seen an increase in growth over the last decade, because from 2000 and I suppose after the recession, it was quite a booming industry for the Irish economy, and it still is to a degree. But obviously, the pandemic has caused a large reduction in the amount of exports, significantly around the world, from Ireland in this industry. So that's obviously going to be negatively impacting the dairy industry. Pandemic has caused a recession, and this have a very negative effect on the dairy industry. There's a risk of overproduction and low-cost competition. Long-term prospects are not encouraging in the dairy industry due to outside influences. Dairy industry doesn't come up as much as maybe some of the other ones we've seen: the food manufacturing industry, renewable energy, clothing companies, stuff like that. Overall, the venture holders would be concerned with the above information. So we're just basically summarizing it. It doesn't appear to be marked going for it this year, but that was 2010. Since then, last couple of years, there's about 3 marks going for just saying those 2 lines, because a lot of people leave them out. Third part, we were asked to do this is a little bit interesting. So this was from a debenture holder standpoint, but now the third one telling us a friend of yours has been given the opportunity to buy ordinary shares. So a friend has been given the opportunity to buy ordinary shares. Straight away, this leads us into this frame of mind: a new ordinary shareholder purchasing shares. So it's a kind of continuation of what we're doing, except it's a different perspective. But before doing so, they ask for your opinion on whether they should buy the shares. What advice would you give? So what information do you need? And this is going to be 15 marks, so it's going to be very brief. You don't need to write anywhere near as the amount of information that you previously have written. You just need to give certain percentages and certain figures and say this is good, this is bad. The 6 ordinary shareholder things that we'll look at, as we would have seen before, is our normal 5: liquidity, profitability, gearing, sector, and dividend. And we also have a bigger focus on shares, and in terms of control, if they tell us how many shares we're going to buy. But they haven't told us they're looking at buying 200,000 shares at 85 cent a price or whatever, so we can't really talk much about control. This, you can say at the start or end, there was 3 marks going for it. I would advise my friend not to buy shares. Usually I'll tell you to write that at the end, obviously, because you have a better idea how the company is doing once you've done up the other 6 different points. There was 4 marks going for dividends and share price, as they're important to shareholders. And even though you had to write the rest, there wasn't really much going for the other 3 here. So the first one we have here is share price. So the share price has fallen from €1.80 to 150. The €1.80 was given here, the 180 cent, and our market value for this year is not actually given here. But in the information here, first part, we asked the market price, which is our share price, if the price earnings ratio is 10. We had worked that out to be market price, share price is 150 cent. So it's fallen from 180 cent down to 150 cent. So you're just basically stating that it's fallen. It's like to continue a downward moving based on current performance. There's a lack of stock market confidence and may discourage investment. Price earnings ratio is 10 years. We were actually given that in the question to earn back our current price. So they'd be the 2 things we'd include here on share price. Dividends, we'd include our normal 3, but we'll be a lot more brief with them compared to I suppose a full question for shareholder. Dividend per share is 11.25%. The dividend per share has dropped from 15, so it's gone down. Dividend yield has also gone down. You can just literally state it like this: dividend yield has dropped from 8.3 to 7.5. Dividend per share has dropped from 15 to 11.25. While the rate is good, the trend is not. So the trend is a bit concerning. It's showing the direction the company is going in. The company's dividend cover has dropped from 1.4 times to 1.33 times. The dividend cover is low and dropping. The firm is not retaining enough profits to build up reserves. So even though there's a lot of money going towards the shareholders in terms of a dividend, it's still kind of concerning that they're not keeping much of the money for their business for future growth. The sector, the dairy industry, you don't need to repeat too much from what you said earlier. The dairy industry is not performing well and the future is insecure. I would change that. This is from the marketing scheme. The dairy industry is performing well, but the future I would change that from 10 years ago's perspective. The dairy industry is performing well, it has been, but the future is insecure due to the recession. Liquidity, there was actually no marks going for liquidity. The company has a serious liquidity problem. The company now only 36 cents available to pay every €1. Profitability is worsening. The return on capital employed for 2019 is 11.80%. Last year was 13, so it disimproved. It actually didn't go through gearing here, but you could include it all the same from what we had above here on gearing, that they're lowly geared. You could literally just take this 2 lines and just copy it down as gearing. On the day of an exam, you actually don't really know where the marks are going to go. If you get something like this, you basically just repeat your normal 6 headings, but you give a lot less information and think about which is going to be most important. So for a friend who's looking to buy shares, they want to know about their dividend return, and they want to know what way the company is looking at going, what direction in, and the direction here is, this is a big telling direction, and the sector a little bit too as well. So that's kind of part C on how you would answer that, but again it's quite similar to part B, so it shouldn't be too different.